We have with us Manav Chopra, Director and Technical Analyst, Nuvama Institutional Equities. Manav, great to have you on the show, and thank you so much for joining us. Just let's start talking about what's happening with the Nifty. Definitely bound in a range. Are we now in oversold territory, waiting for the next breakout?
So what we've seen recently is the first leg of the correction, from its recent highs, and more than 11% correction done in the markets. My sense is the market has bottomed for the short term, not necessary for the medium term perspective. And we have reasonable evidence suggesting that the markets, the lows that we formed last week more or less should hold, and from here on you will see a trading rally to emerge. We've already seen the first leg, from 23,300 levels closer to 24,100. I think the markets are just taking some breather at these zones, and eventually we do expect extension on the upside. Now, on a very short-term basis, with the expiry also this week, once market starts to sustain above 24,300, 400 levels, I think we expect move towards 24,700, 25,000. I think that is where the retracement of the recent decline would stop, and then we would reassess the situation. But largely, we still stand with the view that we are still in a medium-term corrective scenario where the first leg of the correction is done. But in this phase, we are just viewing this move as a trading rally, and then we would reassess at maybe at higher levels.
So you talk about the first resistance zone, 24,000 to 24,100, which is where we are right now, Manav. Now, the question a lot of our viewers would have is, what is the call that you take? Do you wait for Thursday expiry to go through and then take fresh positions on Friday? Or is this the right time for a longer play?
We do anticipate that, in the current scenario, the upside resistance would be violated. I think when we are looking at the market structures, particularly how Bank Nifty or IT is positioned, I think IT has largely outperformed. But, how Bank Nifty is currently consolidating, I think a move beyond 52,500 would actually get some bit of a strong momentum and good push for the Nifty in general. So, Bank Nifty has already seen a good rally from its recent lows, but consolidation near its resistance. I think the next leg would be supported by banks. My sense is with private banks, obviously, which has been quite supportive, PSU banks would start to fire. So likely speaking, we have already recommending selective longs in the banks. Also, the PSU banks looks quite favorable. And with that scenario, once Bank Nifty starts to break above 50 to 500, there is a possibility of a 5% kind of trading rally, which could get markets closer to 25,000. So the next sector looks quite reasonable, and within the Nifty basket, we have already seen how IT banks are supportive, but other sectors will contribute in case of any short covering.
Okay, so which are the sectors that could contribute in case of short covering? You spoke about IT, you spoke about banks. These have seen a stable run-up in relative terms. What are you seeing on the potential side? Is it autos? And autos rallying today, from an M&M to an Ola to Hyundai, everyone having their day in the sun?
The maximum price hit that we've seen in the recent fall was the autos and FMCG in general. I think the price pain in FMCG more or less is done. The sector at best might just consolidate or try to form a base, but within the space you might see an odd short covering rally. For me, autos is in a mixed bag. It is still going to be largely consolidating, but certain stocks within autos will do well, like your M&M, Eicher Motors, Hero Motors, and that matter. But we are not very constructive on autos or FMCG. But these are the spaces within the large caps which are due for some bit of a trading rally or a bounce. And with that, I think market needs to sustain above 24,300 in a very short term to add fuel for some short covering or a fresh momentum leg. I think the only advantage that we've seen in the recent bottom formation was that the mid and the small cap seems to be getting into a comfort zone. The breadth has improved, and a lot of stocks are now sustaining above the short-term averages. So my sense is that this breakout should play out on the upside, and we will see an extended rally. So within that space, obviously the high beta like real estate looks quite well positioned. We are quite upbeat with the PSUs as a theme. I think that is one space that has seen a lot of decline, which are bound for a short covering or a quick trading rally. So PSUs, IT would be my preferred bets if I have to play the next trading rally along with banks.
Okay. Just one last bit. So you're sticking to banks, you're sticking to, I think, the big names right now. But what are you seeing the Nifty close this calendar year at? Manav, I'm just trying to understand, are you going to be seeing this kind of a consolidated range-bound level for the Nifty till December 31st and then maybe a breakout post-Jan?
So the immediate expectation is that Nifty maybe in the month of December should be close to 24,700 or northwards of 25,000. That's my immediate understanding. Largely, Jan Feb too early to anticipate, but we would want to assess the situation how December really goes by in terms of market construct. But my medium-term theme remains that you will find a lot of headwinds and resistance at 25,000, 25,200, and unlikely that market will see move beyond that on the immediate basis until unless we have any big catalyst coming from the other scenario which currently market is not pricing in. But we are only looking for the markets as a near-term trading rally, but the investment deployments would be done only at the lower levels.
Just one last point from you, Manav. In the SMID universe, if you had to pick 2 or 3 winners that seem poised for a breakout after being oversold quite a bit, where would they be? And would some of them be, for example, in your defense, railway space, which have been ignored for a while? Or are you seeing those with, order book focus? Just trying to understand what you're liking right now.
Okay, so my sense is largely, I think the PSUs as the basket, which has been in a corrective decline since early July or mid-July, they have already witnessed a 6 months of decline, which definitely includes names like defense, railways, shipping, select metals. I think the PSU as a space in general has bottomed out or at the fag end of bottom. Certain sectors, my senses have bottomed out within the public sector is your defense and your PSU bank. So we are recommending clients to start taking medium-term, long-term positions in the PSU banks along with defense names. And maybe any more jitters in the markets ahead, we would be assessing this sector very, very closely. I think the next to bottom out should be happening in your shipping along with railways. But that bottom out might take a while. The stock or the sector consolidate. Unlikely that we see a very good bull surge coming in, but more or less, we are at the lower end and the fag end of the stage where things looks comfortable. Beside the public sector space within the SPID, my sense is even the chemical space, which the sector has been in a good underperforming or a downtrend since last 2.5, 3 years. And quite an underweight in the general market theme. So, this is also one sector which has very limited traction. And my base case is that we've seen some subtle accumulation playing out. So, with the PSUs and chemicals within the SMID basket, I think this is an interesting zone where risk reward looks very favorable. And we would be eyeing these sectors for taking some nibble long positions.
One favorite from each.
Okay, so to start with, from the chemicals, it will be Navin Fluorine. The stock has been showing very, very good accumulative patterns, currently priced at 33, 3,400. And, it is forming a good inverse head and shoulder pattern on the long-term charts. And I don't see the stock go below 3,200. So maybe we have a good bandwidth for accumulation, but largely we anticipate a 20-25% kind of a rally coming in. And the sector has been quite beaten down from the public sector. From the large cap, I like BEL, and from the mid cap space, it will be BDL.
Okay, so BEL, Navin Fluorine, these are some of the picks from Manav Chopra. Definitely add those to your list. Manav, thank you so much. Always a pleasure to chat with you, and thank you for joining us today on NDTV Profit.